Imagine this. You're on top of the world. Your company is worth $11 billion. And all of a sudden, everything falls apart until your stock isn't worth a dollar. That's exactly what happened to GoPro. From being the perfect mix between Red Bull and Apple, with cameras that captured pure adrenaline, to dealing with massive cuts, disastrous recalls, and pivots that led to nothing. In the next 20 minutes, I'm going to tell you what went so wrong and, most importantly, how you can prevent the same thing from happening to you in your own business. Get ready for a story that will leave you thinking about every decision you make. Let's dive into this saga of ambition, innovation, and fatal mistakes that transformed an icon into a warning to all entrepreneurs. Origin and takeoff. Have you ever dreamed of capturing an epic moment but technology failed you? That's what drove a passionate surfer to change the game forever and create an empire. Let me tell you the story of Nick Woodman, an entrepreneur who turned his personal frustration into a technological revolution. Imagine Nick Woodman, an ordinary guy obsessed with surfing, frustrated that he couldn't record his adventures on the water without the camera being ruined. We're talking about the early 2000s, when cameras were fragile, large, and expensive, and couldn't withstand saltwater, shocks, or extreme conditions. Nick, a 20-something who had failed at a couple of previous startups, didn't give up on this problem. Instead, he decided to fix it himself. He assembled his first prototype in his garage, a 35mm film camera tucked into a homemade plastic casing, strapped to his wrist with makeshift straps. It wasn't glamorous, it wasn't high-tech, but it worked. You could surf, fall, roll through the waves, and the camera still captured everything without breaking. With this invention in hand, Nick began to snoop like crazy. He sold his cameras door to door at surf shops along the California coast. He was sweating in the sun, convincing skeptical store owners that this wasn't just a gadget, but the future for capturing live action. Remember, at that time, there were no drones or smartphones with decent cameras. People used disposable cameras or very expensive professional equipment that was not suitable for extreme sports. Nick sold his first units for about $30 each, and little by little, surfers started talking about them. It was the beginning of something big, but the technological leap that would change everything was still missing. And then came the digital boom, like a giant wave that no one saw coming. Nick evolved his product, from still photos on film to digital video in VGA resolution, and then, in the 2010s, to stunning 4K with stabilization and high-speed modes. This coincided perfectly with the birth and explosion of YouTube in 2005, when people started sharing videos en masse. Imagine, a surfer records an epic wave with his GoPro, uploads it to YouTube, and millions watch it. Suddenly, users weren't just buying the camera, they became free ambassadors, creating content that promoted the product without GoPro spending a dime on traditional advertising. It was a perfect network effect, a virtuous cycle. The more adventurers used GoPro, the more viral videos appeared, attracting more buyers. Nick had solved a real problem, capturing immersive action, and the world rewarded him with the organic growth that many companies dream of. But it wasn't just luck. Nick was a born hustler. He traveled in an old van, selling at sports fairs, and used his own adventures to test and improve the product. Stories, like him camping on remote beaches to test water resistance, added authenticity to the brand. GoPro wasn't just a camera. It was a symbol of freedom, adventure, and self-improvement. And this attracted a loyal community that shared not just videos, but personal stories of how GoPro captured life-changing moments, such as a parachute jump or rock climbing. This emotional connection was key to the initial takeoff. But wait, what happens when you find the perfect product-market fit at the right time? GoPro didn't just find it, it completely mastered it, becoming synonymous with action cameras. The central idea was simple but brilliant. A small, light, rugged camera that put you right into the action. You weren't a distant spectator with a camera on a tripod. You were part of the adventure, with first-person shots that made you feel the adrenaline. Put it on your helmet while skiing, on your surfboard, on the handlebars of your mountain bike, and record immersive perspectives that no other camera could offer. The timing was impeccable. The rise of social networks like Facebook and Instagram in the 2000s, the culture of sharing extreme experiences driven by reality shows and viral videos, and the growing demand for user-generated content, UGC. Sales began to skyrocket since 2004, with an adoption curve that seemed like a perfect wave rising year after year. Think of this as a perfect storm of factors. Digital technology became cheap and accessible, allowing high resolutions on small devices. High-speed internet made it easy to upload heavy videos, and a millennial generation, hungry for authenticity, wanted to document every leap, every fall, every epic moment to share with the world. GoPro didn't sell mere cameras. It sold pure emotions, adrenaline bottled up in a sturdy package. And that created an emotional bond with users that no competition could easily break, at least for a while. Competitors like Contour or Drift tried to copy, but GoPro had the advantage of being the first and most innovative, with accessories like helmet mounts, chest harnesses, and car mounts expanding the possibilities. To illustrate product-market fit, consider how GoPro was integrated into pop culture. Professional athletes like Shaun White in snowboarding or Kelly Slater in surfing used GoPro in competitions, and their videos went viral. Companies such as Red Bull sponsored events where GoPro was the ideal partner, creating a synergy of aspirational brands. The result? Exponential growth that transformed a garage startup into a global player. But this was only the beginning. Hypergrowth was just around the corner. Now, imagine multiplying your revenue by 4 in just a few years, while everyone calls you the next Apple. Sounds too good to be true? For GoPro, it was reality until it wasn't. But in this act, let's bask in the peak of its glory. The numbers tell it all and are impressive. In 2011, GoPro reported revenue of about $234 million, a huge jump from its modest beginnings. By 2013, that figure was close to $1 billion, and best of all, they were profitable early. Unlike many tech startups that burn cash for years, chasing growth at any cost, GoPro generated real profits, with healthy margins thanks to its premium hardware model and organic marketing. They did not depend on investors to survive. Its user community was driving sales. Then, in June 2014, came the climax. The IPO. GoPro debuted on the NASDAQ at about $24 per share, and on the first day, the price rose 30%, reflecting investor enthusiasm. The initial market cap was around $3 billion, but at its subsequent peak, it reached almost $11 billion. The narrative they sold was irresistible. Red Bull multiplied by Apple, an aspirational brand that combined Red Bull's extreme energy with Apple's iconic design and innovation. Analysts compared it to tech giants, highlighting how GoPro had created an ecosystem where hardware was complemented by simple editing software and a sharing app. The absolute climax was the fourth quarter of 2014, driven by the Hero 4, its flagship product. That quarter alone generated about $634 million in revenue, a record that showed sheer dominance. The Hero 4 was a marvel. Small as a matchbox, it recorded in 4K at 30 frames per second. It was waterproof up to 40 meters without an additional case. It had Wi-Fi for remote control and modes such as time-lapse and burst for quick photos. It sold like hotcakes in retailers such as Best Buy and Amazon, and users uploaded it to social networks, creating an infinite marketing loop. The company seemed invincible, a loyal community that generated free content, partnerships with brands like GoPro Awards that rewarded the best videos, and a global expansion into markets like Europe and Asia. It was the modern entrepreneur's fairy tale, from a garage in California to ringing the bell on the New York Stock Exchange, with Nick Woodman becoming a billionaire overnight. But as in any good story, the rise brings seeds of the fall. Success can be your worst enemy if it blinds you. Competitive pressure and strategic mistakes. What happens when success blinds you and you start to create your own hype? GoPro experienced it firsthand and paid dearly, very dearly, with decisions that eroded its advantage step by step. The triumph brought an overconfidence that manifested itself in subtle ways at first. For example, Nick Woodman's salary package in the year of the IPO reached about $285 million in stock grants, an astronomical sum that reflected the euphoria but also generated criticism for excess. The headcount exploded from a few hundred to more than 1,500 in a short time, with offices expanding and spending on corporate luxuries. Instead of staying focused on being the best action camera in the world, they started dreaming big. They wanted to become a media empire, producing their own content, competing with TV channels and streaming platforms. They hired production teams, invested in grandiose narratives about adventures, but lost sight of the basics, continuously innovating in their core business, resistant and accessible hardware. Here's a teaser lesson we'll look at later. When the success story outperforms the actual strategy, the opportunity cost skyrockets exponentially. GoPro stopped prioritizing what made them unique, indestructible POV cameras, and began to disperse into ambitious visions with no solid foundation. Investors applauded the vision, but internally it diluted the focus. Employees recounted anecdotes of meetings where they talked more about Hollywood than about R&D in optics or batteries. This opened the door to external problems that no one saw coming, or that they ignored out of arrogance. Imagine being squeezed by two giants in a relentless pincer, one attacking from above with premium innovation, and one from below with low prices. GoPro felt that competitive grip and couldn't escape, getting caught up in a market that was changing faster than they could adapt. From the top, smartphones like Apple's iPhone and Samsung's Galaxy dramatically improved their video capabilities. In 2014 to 2015, these devices began offering 4K recording, optical image stabilization, OIS, that reduced shaking, and water resistance without the need for extra housings. For the casual user, 80% of the market, your phone is enough. Why buy a $400 GoPro plus accessories if your pocket phone does the same thing on a weekend trip, concert, or bike ride? Smartphones integrated editing apps, filters, and direct sharing to Instagram, making the need for a dedicated device obsolete for most. From below, a wave of Chinese clones flooded the market with action cameras at ridiculous prices, between $50 and $100. Brands like Xiaomi's Yi or generic AliExpress offered good enough specs: 1080p, basic resistance, compatible frames. They weren't as durable or had the image quality of GoPro, but for beginners or occasional use, they were enough. GoPro was caught in the middle. Too expensive for the mass market that was looking cheap, and not differentiated enough for the pro segment that now preferred drones or mirrorless cameras. Analysts called it commoditization. When an innovative product becomes a commodity, prices fall and margins evaporate. This double pressure was not sudden. There were signs. In 2013, Samsung was already promoting its phones as action cameras in sports ads. Chinese clones appeared on Amazon with mixed reviews but high sales. GoPro responded with occasional discounts, but they didn't restructure their pricing strategy or innovation to counter. Instead, they continued to launch premium products, assuming that branding alone was enough. Fatal error? A product that promised total simplicity, but ended in price chaos, disappointments, and a chain of events that shook confidence. How does a mini mistake become a great crisis that marks the beginning of the end? Let's shred the flop of the Hero 4 session. The Hero 4 session was released in July 2015 as a mini, ice cube-sized camera with a single button to turn on and record, focused on absolute simplicity. It sounded great on paper, ideal for users who wanted something easy, no complicated menus, waterproof without a case. But the errors were multiple and serious. First, they launched it at a starting price of $399, exactly the same as the full-featured Hero 4 Black model, which had more specs like 4K at 60 frames per second and touchscreens. Total confusion in the market. Why pay the same for a light version with fewer features? Consumers were scratching their heads, and sales were not taking off. To make matters worse, GoPro had to quickly downgrade it. First to $299, then to $199 to empty the accumulated inventory. This angered retailers such as Walmart and Target, which had bet on premium shelf space. Why invest in your brand if you devalue your products like this? They complained. It was the first major disappointment for distribution channels, questioning whether GoPro deserved must-have status. The financial impact was brutal. In 2015, total sales fell 31% compared to the previous year, marking the first significant net losses. To stabilize, they laid off 7% of the staff, about 100 employees, in a round that sent shockwaves through the company. This flop wasn't just a product error, revealed systemic failures. The session confused the positioning. It was simple but expensive, without a clear niche. Internally, rumors spoke of pressures to launch quickly to maintain the post-IPO hype, without sufficient market testing. Users on forums such as Reddit criticized the non-removable battery and the lack of a screen, making it seem like a step backwards. In short, the session was the canary in the mine. It showed that GoPro no longer fully understood its audience and that the competition was eroding its moat. When the going gets ugly, some desperately pivot. But if you do it late and without a real upside, you just burn money like crazy. GoPro tested it with drones and a media arm, and the result was a devastating disaster that accelerated its downfall. First, let's get into drones with the Karma, released in 2016 at $799. GoPro bought a startup to speed up development, dreaming of integrating its cameras into a foldable, easy-to-use drone. The idea was great. Combine your hero with a drone for epic aerial shots, expanding the ecosystem. But the execution was a fiasco. Just weeks after launch, they had to make a massive recall of about 2,500 units due to failures in the battery connector, which caused the drones to lose power in mid-flight and fall like stones. Imagine the nightmare. Users reporting crashes, viral videos of destroyed drones, and regulators investigating. GoPro never regained traction. The drone market was already dominated by DJI, with cheaper, more stable products with better autonomy. The accumulated losses from the Karma were around $375 million, including recall costs, returns, and inventory write-offs. It was a desperate pivot without a real moat. They had no strong patents on drones, no optimized supply chain, and no exclusive distribution channel. Instead of innovating in their core, they burned cash in a saturated market. Then, the pivot to GoPro Media, which was even more disconnected. In 2015 to 2016, they hired a production team to create original content, adventure series, documentaries, even a channel of their own on platforms such as YouTube and Virgin America. The vision was to become a media empire, monetizing views with ads and sponsorships. But advertisers didn't see the fit. Why invest in GoPro when there was Netflix or ESPN? Insignificant income, high costs in wages and production. In 2017, they shut everything down, laying off about 200 employees in a painful round. Another example of stepping out of your area of expertise with Me Too products that drain cash and distract from the core business. These late pivots illustrate a pattern: panicked reaction to commoditization without assessing risks. GoPro could have invested that box in AI editing software or smartphone integrations, but they opted for external adventures. The result? Erosion of internal and external trust, with the stock beginning to fall. Fall, balance, and lessons. From dominating 67% of the market to less than 30% in a few years. How does an empire erode so quickly? The numbers don't lie, and GoPro's downfall is a case study in how ignoring trends can be fatal. GoPro's market share fell sharply from its peak of 67% around 2014 to less than 30% by 2024. That year was particularly brutal. They reported a net loss of $432 million, with a cash burn that exceeded $80 million in operations. The stock, which once traded above $90, was hovering around $2, classifying it as a penny stock in practical terms, with a market cap below $350 million. Clear diagnosis: total commoditization of the action camera market, where smartphones integrated the GoPro function with apps such as Filmic Pro or gimbal stabilizers. Chinese clones captured the low end, and portfolio errors such as Session and Karma accelerated the loss of confidence. But let's dig deeper into erosion. In 2016, after Karma's recall, sales fell another 27%, forcing more layoffs and division closures. For 2018, they tried to recover with the Hero 7 and features like Hypersmooth, but it was too late. DJI launched the Osmo Action, stealing share with better price and specs. The 2020 pandemic gave a temporary respite with demand for cameras for home adventures, but post-2021, inflation and intensified competition hit again. In 2023 to 2024, GoPro struggled with accumulated inventory, gross margins falling from 50% to 30% from constant discounts and growing debt. Analysts pointed to a lack of diversification. They relied on 70% hardware, with no strong software ecosystem or subscriptions as competitors. This fall was not inevitable. It was the accumulation of reactive decisions. Now, what really matters: the actionable lessons for you, founder or executive, not to repeat this saga. Defend your price or redesign your cost from scratch. If clones undermine you with cheap products, don't reactively lower prices. Creates solid defensive barriers. Develop an end-to-end ecosystem. Proprietary software for automatic editing, cloud services for storage and sharing, premium subscriptions with exclusive features such as unlimited backups or AI for highlights. Add accessories with a high attach rate, such as smart mounts or modular batteries, so that the total value exceeds the commodity. GoPro failed here. They could have patented more in software to differentiate themselves. Cannibalize yourself in time before the market does it for you. If the phone replaces your casual user, don't fight it. Integrate. Create a software or app mode that turns your camera into a smartphone accessory, with AI for seamless editing. Built-in social features such as live streaming directly to TikTok, or modules that attach to your phone for POV shots. GoPro was slow on this. Imagine if in 2014 they had released an app that used the iPhone as a screen for the Hero, extending its useful life. Maintain a clear and disciplined portfolio strategy. Don't launch a Mini at the same price as your flagship. Each SKU, unit of stock, must have a unique reason for being, with different positioning and price, features and audience. Use market data to test. Surveys, A/B testing in e-commerce. GoPro confused with the session. They could have positioned it as entry-level at $199 from the start, capturing the low end before the clones. Make pivots with a real competitive advantage, not out of pure desperation. Before entering a new market like drones, evaluate your moat. Do you have protected IP, low production costs, a strong distribution channel, or exclusive partnerships? If not, the established leader will devour you. GoPro went into drones without any of that. DJI crushed them. Instead, focus on adjacencies, from cameras to fitness wearables with built-in tracking. Put the unit count in the cash register first, always. Obsessively monitor gross margin per unit, markdowns for inventory errors, profit-eating recalls costs, post-UGC CAC when organic marketing weakens, and the cash conversion cycle so you don't run out of liquidity. GoPro burned hundreds of millions on failed pivots. They could have used predictive metrics to cut losses early. Apply these lessons and transform other people's mistakes to your advantage. The waves of technology ride you high and also roll you mercilessly. The difference is in your strategy. Anticipate, adapt, focus. What would you do differently if you were GoPro in 2014? Reflect on that and apply these lessons to get your business surfing the next wave instead of drowning in it. GoPro reminds us that a big wave is not a sustainable strategy. The next wave always comes. Prepare yourself with unwavering focus, financial discipline, and clear vision that prioritizes the core. Thank you for watching Business Saga. Subscribe for more stories that transform the way you think about business.